I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews we have Jeroen Offerins, the CTO of Centrifuge, here to talk about on-chain, bringing everything on-chain, real-world assets, tokenization, the Ethereum ecosystem, and much, much more. Jeroen, welcome to the show, and thanks for taking the time.
Yeah, thanks so much for having me. Really glad to be here.
Very welcome. I actually have been following Centrifuge for many years. I know it's not a new project, and your team's been working hard. I would love to sort of get a high level for those who have maybe have seen Centrifuge around, but they don't know exactly the intricacies and what you've been up to more recently. If you could give a high level on the platform and what your focus is on, then we can dive into all the details after that.
Yeah, absolutely. I mean, yeah, you're right. Centrifuge has been around for quite a while. We kind of co-founded in almost 7 years ago, and we went live on Ethereum mainnet in 2019. Everybody who's been around since then knows that crypto has changed radically since then. What we started focusing on early on is bringing real world assets into DeFi. Back in 2019, 2020, that was a pretty crazy idea, and we were one of the, if not the first ones doing this. And really back then, RWAs were not a term that anybody was talking about. We're in a very different market now, I would say, and positively so. So what we're focused on today is building an on-chain tokenization and asset management protocol. What that means is, right, by tokenization, I think everybody's familiar with this. It means taking off-chain real-world assets, bringing those onto a blockchain, and then using blockchain for everything that it's built for, which is utility and DeFi and so on. And then the other part that we're really focused on is not just taking something that's off-chain and putting it on-chain, but actually really trying to streamline and bring the entire process of running a fund and managing assets directly on-chain. So really building all the smart contracts and all the plugs needed to transform the financial system beyond just launching a new ERC20 token.
Yeah, no, it's crazy that you guys were way farther ahead than BlackRock in their tokenization of real world assets. You saw that coming. How has that, the vision and then the practicality of actually doing it shifted throughout the years of getting into real world asset tokenization, sort of when it was very, very early on, and now where as it's more maturing? Has that shifted a lot in Centrifuge?
Yeah, 100%. I mean, early on, right, like 2020, 2021, what we were focused on and like the discussions we had with every DeFi partner and anyone that we were working with was how do real world assets compare to DeFi assets, right? Like how do you compare all of these assets that exist in the traditional world with going long ETH or going long crypto, Bitcoin or anything like that. And so what we try to focus on is bringing new assets that really brought different kind of risks, different kind of yields to the DeFi ecosystem. Um, Now we're in a very different time. We have indeed BlackRock being the best example of a huge institution participating on blockchain directly, launching their own token using DeFi. I think that's been a great step for the market. I think we're very happy to see that. And I think overall, I think we start to see this big shift from institutions saying, look, we want to work with this, we're interested in it, let's do a small POC, maybe let's launch a private blockchain, to now we're in a moment where everybody's saying, well, we're going to launch a token yesterday, we want to launch a stablecoin today, right? Like they're all ready, they're all trying to participate. And that's amazing. Like we're working with a big institutional partner called Henderson, which is a huge asset manager managing $400 billion as well. It's been incredible to see how quickly they're able to move and adopt these new technologies because they realize this is inevitable at this point. I think that's the driver. That wasn't the case 2 years ago even.
Yeah, it's crazy to see, and it's great for blockchain in the industry to see enterprises coming in and major institutions, and they don't need 2 years of let's figure this out early on. They feel like they're at that point where they need to catch up. They're like, we see this is the future. We need to tokenize something. Let's get it done today or this week, which is great for guys like people in Centrifuge that have been working on this technology for years. All of a sudden, now the market is caught up to it. Okay, people want this, and there's a high demand for it.
100%. I completely agree. And I think what's interesting as well is all of these institutions, what they recognize is there is this broad set of experience and expertise that already exists in DeFi, from DeFi protocols like Morpho and Aave and Maker to the existing tokenization protocols like Centrifuge and some others, what they see is, right, and what they tend to do is rather than try to build everything themselves, which they also realize it's a very different game than building in traditional finance. Most of them are actually converging on partnering with technology providers that already exist. I think that's really a win-win. It means that you can combine the DeFi know-how and technology strength of a partner like Centrifuge with the experience that an institution like this brings. And I think that really gets us the best results.
Yeah. I'm looking forward to more institutions getting into Web3, realizing it's the future. I think we've known it for quite a few years, but it's great to see everyone else catching up. And now, being the CTO at Centrifuge, which is focusing on the technology, can you talk a little bit about the underlying technology, the blockchain infrastructure? Is it all Ethereum? Are there other chains? What works best for RWA?
Yeah, absolutely. I mean, so we're in a big transition right now. We have Centrifuge V3 launch coming up in the next few months. And where we're going with that is becoming a fully multi-chain EVM protocol. What that means is how we see the market developing is we do see most of the liquidity, most of the use cases for RWAs on different EVM-based blockchains today. I think there's a lot of exciting stuff on other L1s as well, but 80-90% is still on the EVM. And then you start to see that it's really not just on Ethereum mainnet anymore, very much so on Base and Arbitrum and Avalanche and all those other networks. And so our strategy is really building an open protocol that our partners, the asset managers, the institutions can use to tokenize and manage their assets on all these different networks. And then one specific thing that we're really focused on is actually basically building the first chain abstraction protocol for tokenization. What I mean by that is, right, if you're a big institution with a strong kind of asset management background, but not necessarily the crypto know-how, you really don't want to be interacting with 10 different blockchains, using 10 different custodian setups, managing gas tokens everywhere. I mean, even as crypto degens know the issues with that. So what we're focused on is basically allowing them to use just one blockchain and manage the liquidity from all the other blockchains from that single hub. I think that's a pretty big step in ultimately improving the user experience. I think that is the other part, right? Like, we all know that the user experience in crypto is something that has improved a lot over the last few years, but still we have a way to go. And I think these kind of things really help to take it to the next level.
Definitely. I know sort of having that white glove or hand-holding experience, even for a large institution, I feel like it's necessary, because I could see many enterprises coming in and they say, yeah, we want tokenization, we know about Ethereum, but they're like, there's like 20 other L2s on Ethereum, and what about Solana and Polkadot and all these other ones? Where do I start? I don't want to have to go through a 4-year degree on which blockchain is best. We want to get this tokenization done this week. So how do you explain that in a way that it's like, okay, we got it, and how big of a focus is interoperability, but at least between Ethereum chains?
Yeah, I mean, to the first part, I think an approach that we've taken, which I think has really served as well, is we have Centrifuge, which is a DAO, it's a decentralized protocol, can be used by anyone, it's fully open. But then also we have an entity called Animoy, which is an entity in the Centrifuge ecosystem. It's basically a regulated service provider that helps these institutions to use the technology. And I think that's where we kind of combine that decentralized technology and the openness with the service that some of this institution needs to start building into this space. So I think that's really served as well. In terms of interoperability, I think it is essential that this market is not going to grow to many percentage points of GDP that we expect it to if we all have isolated blockchains with isolated sets of liquidity. It is a hard blocker. I think what's been incredible to see over the last few years is obviously, one, there's been a lot of improvements on kind of bridging and the connectedness between the networks. You still have, I would say, a lot of liquidity isolation, meaning, for example, generally blockchains where Circle is directly deployed with CCTP is a lot easier to use if compared to if you don't need like a wrapped USDC token. And that's like a very specific technical issue, but like you still see these issues that are not fully resolved, I would say. So I think this is still an ongoing part. The other thing, which maybe a slightly different angle, which is less about blockchains and more about interoperability with smart contracts, is really how do these RWA focused contracts work together? How does a protocol that wants to automate investments in RWAs actually buy different RWA tokens? And this is something that we've really spent a lot of time and energy on, which is one of the things we did is we co-authored this ERC standard called ERC 7540. This is an on-chain investment standard specifically built for mostly RWAs. I'll go into some other use cases as well. It's an extension of ERC 4626, which is a widely adopted standard, I think over $13 billion in TVL today. And it's really imagined to kind of take composability for RWAs to the next level. And it's really exciting to see. It's already adopted by quite a big part of the market. Superform is using it, which you might be familiar with. Plume, which is another RWA player. And then recently, we'll talk about this as well, I'm sure, we're working with Maker and Spark, and they're going to use the standard as well. I think that's a really big step for connecting all of these systems together.
Yeah, no, I agree. The more interoperability and compatibility within blockchain, if we're going to grow to more percentage points of the market and people are going to shift in, it needs to all work with each other very fluidly. So I think over the past years, there's been a lot more interoperability, especially as real world assets become tokenized, being able to make sure there's no barriers to moving it to another enterprise that maybe set it up on a different chain. That's going to slow down progress a lot. So I'm glad that there's a focus on that. And I'm curious about the actual types of assets that could be tokenized, because the possibilities are almost endless. You could tokenize securities, you could tokenize commodities, real estate, your car down the road. There are some early adopters in the types of assets. Do you see a specific or any groups of assets that enterprises and institutions are coming and say, this is what we want to tokenize? Or where do you see the market growing early on?
Yeah, the first question you have to ask, right, like where is currently demand for these kind of assets in DeFi? And mostly what you see and what kind of DeFi protocols and foundations in DeFi and so on are looking for is ultimately diversity from the volatility in crypto. And what that means, right, is they want stable assets that give them a predictable yield. Generally, that today means fixed income and mostly US treasuries and T-bills. And that's where you've seen most of the growth in the RBA market in the last year or two, which is basically tokenized funds buying short-term treasuries. That's been a very simple use case, I would say, but one that really serves the market very well today, especially with all this growth in the stablecoin market, where all of the stablecoins, again, what they need is stable collateral that is very low risk and also very high liquidity. And so it's kind of a perfect use case for that. I think what you'll start to see now is because the tokenized T-bill market is starting to be quite saturated, there's a lot of offerings, you'll start to see diversity away from that. I think the biggest next area in the short term is really more fixed income across the risk return curve. So slightly higher yielding assets, maybe a little bit more risk, but still pretty high liquidity, so it's still easily swappable to stablecoins. I think that's going to be interesting. I do think you'll start to see other more equity-like products. So tokenized index products, I think, is quite an interesting area that could really give users on-chain the ability to, ultimately invest their capital in a way that they can kind of grow it longer term. I think tokenizing individual assets like cars and real estate, quite long term, right? Like the reality, it's mostly a legal issue. To actually have tokenization on chain, you do need an off-chain legal structure. And generally the cost of that is not insignificant. So it doesn't really make sense to do that on a case-by-case basis for an individual car and an individual mortgage. So generally you do that for funds or kind of index products. I hope that kind of regulation will change in a way that will be more accessible in the longer term.
Yeah, no, it's a great point, and I could see how fixed income is, if you're an institution or enterprise moving into a new industry that might be a little foreign, the more stability and fixed income, the better. And that's why I think stablecoins are so important for DeFi. Maybe you could touch on that a little bit more. There's a lot of discussion around legislation coming in around stablecoins as well, and further adoption of enterprises. I think that's the first thing, maybe even more than Bitcoin, in that they're like, we need to make sure that we have stability. If we're going on chain, let's make sure that we have the right stablecoins in DeFi if we're going to do RWA?
Yeah, I mean, 1,000% agreed. I think stablecoins are one of the main products in DeFi today that have really found product market fit. There's several like very clear use cases, from like cross-border payments to ultimately just giving yields to holders of USD, to using those stablecoins in DeFi for other use cases for leveraging and so on. I think you've seen an incredible amount of growth, and I think a lot of that is also because we have stronger collateral on chain now, right? Like most of these stablecoins, if you think about just Maker and USDS, their number one collateral today is actually treasury bills. And so I think having that stability is a big part on why they're able to grow safely. So it's really, I would say, stablecoins and RWAs still very much hand in hand.
Yeah. And with more interest in DeFi, there's always been an early interest from the crypto degens and people that have just been looking for different yields, and the smart ones also looking for stable yields as well. What is the access like on Centrifuge? You're working with these enterprises and institutions, but what about people like everyday traders or just investors? Can they go and just go to the open market and be like, hey, this enterprise has this available and I can just play with it myself without really being involved?
Yeah, it's a great question. So I think this is something we're really focused on and trying to improve. Where we are today, right? Like most of these tokenized offerings are securities, and there's quite a significant onboarding process. But what's really interesting, right, is you can reuse these products within DeFi. So one of the examples I mentioned, Maker already, if you buy savings, USDS or savings DAI today, the yields you're getting is ultimately RWA yields. And a quite big part of it is actually Centrifuge tokenized product yields, because we're kind of collateral within Maker. So there is a way to get exposure to RWAs, but it's mostly through other DeFi protocols. Another example is we have a big partnership with Morpho, and there's a stakehouse in RD7 vaults curated by them that ultimately are buying the same RWAs. For those things, I think what's a really interesting use case, you don't need to do full KYC. You only need to have a basically Coinbase account. And because you have a Coinbase account, the issuers can basically trust that you're not from the US and you're not on a blacklist, so they're able to accept those investments. I think that's really exciting. It also technically works really well together, like it's all on Base. So it's pretty seamless UX. So I think those are the big steps. We also have an exciting kind of announcement coming on this front from our side, where we're going to have a new product that will be much more accessible to a retail audience, but that will be announced in the next 3 months.
That's exciting. I'll be following along there for sure. And since the Trump administration has come in, it's been 2 months or so. A lot has happened in crypto. He said a lot, and there's been huge advancements in strategic Bitcoin reserve, but I feel like that's just the tip of the iceberg, and that eventually is going to trickle down into more stablecoin legislation, more of the traditional financial world in the US, which is the #1 financial market in the world, moving into to Web3 and RWA more, which is probably good for Centrifuge. How do you see that plan playing out? I think a lot of people thought, we're going to flip a switch and on day one, we're going to the moon and everyone in traditional finance is going to start onboarding into Web3. And of course, it takes time, but there is that more urgent demand than before. But how do you see that playing out as legislation comes out versus just interest as institutions in the US potentially wake up to the fact that there's all this other stuff going on with Bitcoin? They should probably just get into Web3 in general.
Yeah, I mean, I was saying earlier in the call that I've been positively surprised by how quickly these institutions are able to move. But we still need to acknowledge that actually moving over the entire financial system to new blockchain rails is not an easy task. And I think what's happened in the US and the work that's been happening there is incredibly exciting. I think so many positive movements. The fact that there's really actual usage of DeFi protocols on Ethereum and Solana. Launching a stablecoin is the most recent announcement by the World Liberty Foundation. These are great steps to ultimately legitimize crypto, legitimize blockchain technologies for the institutions. Because what's most important, is that institutions get comfortable using and building their business on top of these technologies. And that takes time. It means both adoption and kind of the broader market moving, and that's I think where this is so positive. But it also means regulatory clarity, right? Ultimately, right now, I mean, I don't even know how much we spent in the last 7 years on legal costs, and really most of that is going to the fact that so far a lot of these lines and what can be done and what cannot be done has been really in a gray area, and it's been hard to figure out what is possible and what is not possible. We've always been very strict in terms of adhering to the right to all of the regulations and rules that exist, but that takes a lot of time and a lot of investment, and it's not very accessible to the average kind of startup. So getting more clarity, getting more black and white, what is possible, and ultimately opening up the market, right? Like creating better rules for stablecoins, better rules for decentralized protocols. That's all essential. And I think it seems like there's a lot of good movement in that direction. So that's great to see.
Yeah, it is really great to see. And with all these updates happening, what is potentially in the roadmap for Centrifuge for this summer and moving into Q3 2025? What's the main focus on rolling out other parts of the platform and obviously onboarding more institutions?
Yeah, so I mean, the biggest product launch for us is really the new V3 product. That's going to go live on several EVM blockchains on day one in the next few months. And that's really going to bring the next set of use cases for RWAs. And I think it's going to enable a lot of the institutions to do much more on chain that they've been able to do in the past. I'm really excited about what we're going to be able to do with that. Beyond that, I think what's really big is last week, Maker or Sky announced the winners of their Grand Prix. This was basically a huge RFP of $1 billion for allocating to RWA protocols. And they decided to allocate to three parties, BlackRock, Superstate, and us. And so we're going to get basically 200 million TVL commitment from Spark in basically them buying tokenized T-bills. That's an amazing step for the market. They're really the biggest buyer of RWAs on chain today. Wow. But it's also an amazing partnership. I think we're going to be able to go much further together with them. They're buying entirely tokenized offerings, which is great. And I think there's a lot that we can do with them.
Wow, that's really exciting, and that's great company to be in. I'm looking forward to seeing those updates over the next couple months. And I think the market overall and hopefully Trump's administration is going to keep pushing in that direction. It's probably going to help Centrifuge and Web3 overall. So we'll see if the US really does become the crypto capital of the world, or the whole world just catches up. Would be great too. So what is the best way to follow along with those updates that are coming out, and then also just to test out Centrifuge and follow along with anything else?
Yeah, you can follow us on X or Twitter. So it's at Centrifuge is where we are. I think we're going to share all the updates related to what we're doing there. You can also go to app.centrifuge.io, which is our main UI, where you can see all of the products that we have today and all of the growth. And I think that's going to be a great way to kind of get started.
Sounds great. I appreciate your insights into real world assets. Wishing you and the team all the best on the DeFi side of RWA and tokenization. Thank you for bringing more institutions into crypto, which is for sure the future now. And we'll see, I think T-bills and fixed income is a great start for real world asset tokenization. And I'm expecting eventually the entire US financial system to be on chain and faster, cheaper, global, and the future. So appreciate your insights into it and the contributions that Centrifuge has made to making that possible.
Yeah, thanks so much for having me. It was a really great discussion, and I think we're all excited for that future. I think it's getting closer than we think.